Welcome back. Still tuned into the market. 15,819. The resilience very evident in the equity markets as you've got the broader markets as well. Up a 0.5% neck to neck with the frontliners. On the Nifty 100, Piramal Enterprises, Coal India continues its up move. Oracle Soft comfortably in the green. Bajaj Finance as well as Bosch, Dr. Reddy's and Reliance Industries lending a helping hand at 22.14. But let's also take stock of what's happening with respect to the construction sector. What is the demand situation? What has been the impact of the second wave? And what the future growth triggers are. Sorab Agarwal is the Executive Director at Action Construction Equipment and now joins in on the show. Thank you so much for taking time out. To begin with, just let's get in a sense from you as to what the impact has been of this pandemic, the second wave that took everyone by surprise on overall construction activity. Now with the opening up, has there led to some sort of a decisive pickup in demand?
Yeah, good morning. Things did slow down drastically, especially in most of the cities during April and primarily May. And now things have started looking better, especially in the north and the western part of the country. I think South India is still reeling under the COVID thing, so that will take another maybe half a month or 1 month before it starts to pick up again. But unlike last time, most of the work continued to be there, with lesser labor, maybe at 60, 70%, 80%, but work continuing, unlike the last time. And like I said, things would definitely start to improve by middle end of June, and hopefully July would be normal.
Middle end of June and July, yes, that's the general sense that we're getting across the spectrum. Wanted to also get in a sense, if we're looking at your company in specific, your margins have managed to improve on a year-on-year basis, but sequentially they were down, and that's largely on account of the higher input costs. With this current run-up or the recent run-up that we've seen in steel prices, how are you coping with that as a company?
Steel has been playing havoc with most of the manufacturing sector which uses steel. And since September, October last year, it's just been going up. So we took a price increase last year in October, November, followed by a bigger price increase in January. But unfortunately, even during the month of April and May, and especially June beginning, again, steel has again risen. So to offset this increase in our input cost, we have already decided to take a price increase, which has been floated. So middle end of June, it will become effective. We are just giving a small 15-20 days to our customers, just in case they were not able to buy in the month of May because of lockdown. So it will become effective middle end of June, the price increase. And this time we're increasing our prices again by about 5 to 7% depending on different products.
Okay. Sorab, all segments, in fact, were performing well. Take us through the outlook for construction equipment, material handling, and also agri-equipment going forward?
We have four main segments, the biggest of them being crane, which is about 64% of our revenue. Then construction equipment, where we do about 11% revenue contribution comes from there. Material handling is about 8%, which is primarily forklifts and some warehousing machines. And agriculture, which is about close to about 17% to our revenue. So on the whole, if I talk of the last year, yes, because we are market leaders in the frame segment and the market did shrink because the first quarter was nearly a wipeout in the last year. So our crane numbers were down by close to about 8-10%. But on the other side, we were able to increase our business in the construction equipment, agri as well as material handling segment. And going forward, even in the current year, and hoping that June would be slightly better than May, and July things should start to normalize. So we are looking at our cranes growing in this year rather than degrowing. Maybe at a smaller pace, 10-12% are definitely growing. And our other segments like construction equipment, where we do backhoe loaders, rollers, motor graders, material handling, and even the agri side, where we have tractors as well as track combine harvesters, growing by close to about, like construction equipment, maybe about 25-30%. The material handling forklift segment about a 25%. And something similar, I would say, for the agri side as well in the current year. So on the whole, maybe putting us with respect to, let's say, about 10 to 15% growth scenario. Looking at what the scenario is now, yeah, if things, recover in a way which they did post last year after April, May, and June lockdowns. So it can slightly be better than this.
What about strong construction activity in ports, metros, airports? How's that going to help demand, and have we seen an impact of the pandemic on activity so far?
See, our government is totally focused on infrastructure development because that is one of one of the main ways to get the economy rolling and increasing it further. So infrastructure activity or construction activity with respect to most of the metro projects or even railways or airports or wherever you can think of, including roads, has been on the rise in the last year. And I'm sure that with the second wave coming in and being a little more deadlier, the government's focus towards this activity is going to be even more enhanced. And apart from that, see, yes, I would say about a 50-60% revenue of our company does come from infra. But we also primarily operate in the manufacturing space and the agri space. So again, in the manufacturing space, with this, most of the capacities here and there being utilized in the last year as the pent-up demand came in and the capacities got utilized. And another thing which we hear is the China Plus One strategy and global supply chain, some part of it shifting to India. So going by all that, I think we should be, or we are on the verge of...
Sorab, apologies to... Sorab, apologies to interrupt you there. We're running out of time. The one question that I definitely want to squeeze in is, we understand that you're aiming for a double-digit growth in revenues and a sustained EBITDA margin in low double digits for FY22. Are you sticking by with the guidance? Do you think you can even better it if the economy does begin to look up? And what's going to actually lead you to these growth numbers?
I think the right time to answer this question would be sometime end of July or early August, when things would have totally unlocked and the scenario would be moving. See, and looking at the pace and our experience from the earlier lockdown, we are very sure that in 1 or 2 months things will bounce back, and that gives us the confidence that. And another main thing is the Q1 of this year is definitely much better than the Q1 of last year, which was practically in lockdown. And so this year, the Q1 would be better than that, and things will start to unlock faster with our past experience. So that gives the confidence that we should be on a growth track in this year. Balance time will tell, and at middle of, like I said, next quarter would be the ideal time to provide a much more accurate projection.
Okay, so you're not delving into numbers at all, but let's get in a view then as to what the outlook is for the cranes business. Has momentum picked up? Have inquiries picked up? What were some of the challenges that you faced over the past few months?
Definitely, in the last week, 10 days, inquiries and order inflows have picked up because markets have started opening, especially in North and West, and in bits and pieces in South as well, which is a very positive sign. And it has happened as soon as the lockdowns were getting over, started to get over in different states. So that's a very positive sign. And just to answer that question of yours with respect to our growth numbers, we are definitely looking at 10 to 15% growth. Maybe more than that, but that only, it will be opportune, or it will be prudent to answer it after 1 or 2 months.
10 to 15% revenue growth, and what is it that you're targeting on margins, if I got that correctly?
We should be anywhere between 11 to 12% at EBITDA level, and leading us to a 9.5% PBT. This should be the bottom number we should be looking at. Balance, like I said, everything depends on the revenue increase and where we are going to go, because the operating leverage kicks in as soon as the revenue starts to increase. As we have enough capacity, so practically there is no capex required. So it's just that the demand which had started to fly in the Q3 and Q4, where we were not able to fulfill the requirements in the market. All of a sudden, it went into sleep in the month of May especially, and I'm sure it will pick up again.
All right, thanks for joining us this morning, Mr. Agarwal.